To read and interpret FEMA flood maps, you first need to understand that these maps, known as Flood Insurance Rate Maps, FERMs, are used to identify areas at risk of flooding and to determine whether flood insurance is required. Each property on the map will fall into a specific flood zone category, represented by a letter code such as AE, AH, or X. High-risk areas, known as Special Flood Hazard Areas, SFHAs, include zones labeled A, AE, AH, AO, and VE. For example, Zone AE indicates an area where there's a high risk of flooding, and it provides a base flood elevation, BFE, which is the projected height that floodwaters are expected to reach during a 100-year flood. Properties in this zone are typically required to carry flood insurance if financed through a federally backed loan. Zone AH also indicates high risk but is specific to shallow flooding, usually from ponding, and also includes a BFE. Zone AO represents shallow flooding from sheet flow on sloped terrain and shows average flood depths instead of elevation. Zone A, another high-risk designation, does not include a BFE, making it less detailed and often requiring an elevation certificate to determine actual flood risk. Coastal areas, which don't apply to most of Arizona, are labeled as Zone 5 or VE and come with high flood and wave hazards. On the other hand, moderate to low-risk zones, such as Zone X, both shaded and unshaded, indicate areas where the likelihood of flooding is significantly lower. Shaded Zone X refers to the 500-year floodplain, where flood insurance is not required but still available, while unshaded Zone X reflects minimal risk. Flood maps may also show designated floodways within high-risk zones. These are critical areas where water must flow during a flood, and development is typically restricted or prohibited. Understanding FEMA flood zones helps buyers, sellers, and real estate professionals assess flood risk, comply with insurance requirements, and make informed decisions about property development and value. Let's break that down a little. How to read and use FEMA flood maps. FEMA flood maps, flood insurance rate maps or FERMs, show areas that are at risk for flooding. You can access them via https://msc.fema.gov portal home or through MLS overlays and monsoon in Arizona. What to look for. 1. Property location. Find the exact parcel on the map. 2. Flood zones. Each zone is labeled with a letter, e.g., A, AE, AH. 3. Base flood elevation, BFE. The elevation to which floodwater is expected to rise during a 100-year flood, shown in some zones like AE and AH. 4. Floodway versus floodplain, O floodway, highest risk, no development allowed. O floodplain, still high risk but may be buildable with elevation. FEMA flood zone types, what they mean. Zone A, high risk flood area, no base flood elevation, BFE provided. Requires flood insurance for federally backed loans. Must get an elevation certificate for accurate premium. Zone AE, high-risk flood area. BFE provided, e.g., flood elevation 6002 FT. Lenders require flood insurance. Most common high-risk zone. Zone AH, high-risk shallow flooding, ponding areas. BFE included, usually 1 to 3 feet of water accumulation. Requires flood insurance. Zone AO, high-risk shallow flooding along sloped terrain. Depths of 1 to 3 feet shown instead of BFE, often from sheet flow on hillsides. Insurance required. Zone V and VE, coastal high-risk flood zones, tidal surges, tsunamis, not common in Arizona. VE zones include wave action risk. Insurance required with stricter building codes. Zone X, shaded. Moderate flood risk. In 500-year floodplain. Insurance optional but recommended. No BFE. Zone X, unshaded. Minimal flood risk. Outside the 500-year floodplain. Insurance not required but still available. Floodway, designation, overlay. Part of Zone AE or other high-risk zones. Water must pass through during flood. Building typically not allowed or highly restricted. Why is it so important to have a flood certification during the inspection period? The importance of flood certifications during inspections cannot be overstated, especially in areas prone to flooding, such as many regions in Arizona. A flood certification, often called a flood determination certificate, is a formal document provided by a third-party company that uses FEMA's flood insurance rate maps, FERMs, to determine whether a specific property lies within a federally designated Special Flood Hazard Area, SFHA. This certification is critical for lenders, buyers, and insurers and plays a key role in the home buying and loan approval process. Why flood certifications matter. During inspections. 1. Identifies flood risk early. A flood certification tells you whether the property is in a high risk, e.g., Zone A or AE, or moderate to low risk area, e.g., Zones X or B. Knowing this early allows buyers to budget for flood insurance if needed, assess the long-term risks associated with owning the property, decide whether they're comfortable proceeding with the transaction. 2. Required by lenders. Lenders are legally required to obtain a flood certification before finalizing a loan. If the property is in a high-risk zone, flood insurance is mandatory for most federally backed mortgages, FHA, VA, USDA, Fannie Mae, Freddie Mac. Insurance must meet specific coverage standards, potentially affecting affordability or approval. If the property is in a non-hazard zone, lenders typically don't require flood insurance, but buyers may still choose to purchase it for added protection. 3. Impacts insurance costs and loan qualification. If a property is found to require flood insurance late in the process, and the premium is high, it can throw off a buyer's debt-to-income ratios, disqualify them from their loan, lead to cancellation of the deal, especially if discovered after the inspection period without proper review. This is why it's best practice to request a flood certification during the inspection period, not just at underwriting. 4. Informs buyer due diligence. Per the Arizona Residential Resale Real Estate Purchase Contract, Section 6D, the buyer is responsible for determining if flood insurance is required and estimating its cost during the inspection period. If a flood certification is obtained too late, buyers may miss the opportunity to cancel and recover their earnest money. 5. Affects resale value and marketability. Properties in flood zones may have a smaller pool of buyers, be harder to sell due to mandatory insurance costs, require additional disclosures in future transactions. A flood certification provides documentation that buyers can use not only during their purchase, but also to inform future buyers when it's time to sell. 6. Protects all parties. Flood certifications give buyers transparency and allow for risk management. Help agents comply with disclosure requirements and risk mitigation. Allow lenders to satisfy federal regulations. Prevent unexpected expenses or post-closing surprises. Getting a flood certification during the inspection period is a critical step in due diligence. It protects buyers from surprise insurance costs, helps them evaluate the true cost of ownership, ensures compliance with lender requirements, and can make or break a deal. Because of the flash flood conditions and unpredictable monsoon events in Arizona, even properties that don't appear to be near water sources may fall into a high-risk zone, making certification even more essential. We talked a little about what a lender will look at regarding flood areas. Lenders have specific flood insurance requirements based on a property's FEMA-designated flood zone, especially for loans backed by federal agencies or secondary markets like FHA, VA, USDA, Fannie Mae, and Freddie Mac. These requirements help protect the lender's investment in properties located in flood-prone areas. Lender requirements for flood insurance by zone high-risk zones, special flood hazard areas, SFHAs, includes FEMA zones, A, AE, AH, AO, V, VE. Flood insurance is mandatory for any federally backed mortgage. The borrower must maintain a policy for the life of the loan. Insurance must meet the National Flood Insurance Program, NFIP, minimum standards. Coverage amount must be the lesser of O. The loan balance O. The value of the structure, not land. O. The NFIP coverage cap, typically $250,000 for residential buildings. Elevation certificates may be required to assess premium rates or determine compliance. Moderate to low risk zones, non-SFHA, includes zones X shaded, X unshaded, B, and C. Flood insurance is not required, but lenders must disclose the option to purchase it. Lenders may strongly recommend coverage due to unpredictable weather patterns or changing flood maps. Insurance is available at lower premiums and can offer valuable protection even without the mandate. Private flood insurance versus NFIP. Lenders must accept private flood insurance if it meets or exceeds NFIP standards. Private policies must: O. offer similar coverage limits. O. be issued by a reputable insurer. O. include clauses consistent with federal compliance standards. Important notes for borrowers and agents. A flood zone. Determination certificate is typically ordered by the lender during underwriting. If flood insurance is required and costs are too high, it may impact loan qualification due to debt-to-income ratios. If flood insurance becomes a requirement after the inspection period and the buyer can't qualify, they may be entitled to cancel the contract and recover their earnest money, provided the financing contingency still applies. Buyer's failure to investigate does not excuse seller's fraud issue. The seller of a vacant lot knows that the vacant lot is in the floodplain, but intentionally and fraudulently fails to disclose that the vacant lot is in the floodplain. Although the buyer could easily discover during the inspection period by inspection of county records that the vacant lot is in the floodplain, the buyer did nothing. After close of escrow, the buyer learns that the vacant lot is in the floodplain and that the buyer will not be able to build a home on the vacant lot. Is the seller liable for the intentional and fraudulent non-disclosure of the floodplain status, even though the buyer may have been negligent in failing to investigate the floodplain status of the vacant lot? Answer: probably. The general rule is that the recipient of a fraudulent and intentional misrepresentation occurring either by commission or omission is justified in relying upon the truth, although the recipient may have ascertained the false representation had the recipient made an investigation. Restatement 2nd of torts. CRA 540. Barnes v. Lopez, 25 Arizona App. 477, 544, P2D 694, Sign App. 1976. After seller made a fraudulent and intentional misrepresentation as to the zoning status of the property, the buyer was entitled to rely on this misrepresentation and had no duty to make further inquiry. Arizona, Realtor or Digest, July 2006. This is from the Arizona Realtor's blog. From Line floods are the most common and widespread of all natural disasters. Heavy monsoon storms, which are common in Arizona, can produce flash flooding in rivers, washes, and other areas where rainwater flows. They can occur with little or no warning and reach full peak in only a few minutes. The City of Phoenix can help realtors identify whether a property is located in a special flood hazard area and if elevation certificates are available. Contact the Floodplain Management Section at 602-262-4960. Floodplain Management, located in Phoenix City Hall, 200 W. Washington St., 5th floor, Phoenix, AZ 8503-1611, is open weekdays from 8 a.m. until 5 p.m. In Tucson, visit the Development Services Department website under Engineering Forms or come by the department in person at the Public Works Building, 201N, Stone, 1st floor, Tucson, AZ 85701. Flagstaff residents can visit www.flagstaffstormwater.com, click on Floodplain, or call 928-779-7650-X7213 for help. Homeowners should be aware of the importance of floodproofing and ensuring a flood-prone home. To protect a home from flood losses, homeowners can purchase flood insurance through the National Flood Insurance Program. Homeowners' policies do not cover flood damage. Owners should contact an insurance agent for information on flood insurance. NAR policy supports the development of a federal natural disaster policy that promotes the availability and affordability of property insurance nationwide.